excited to welcome to the stage Mike Klein. He's the CEO of Genomenon. Mike is an accomplished CEO with over 25 years of experience developing, building, and growing high-tech software and IT companies. He said this is his fourth company now he's done this, so he's had a few bouts of experience. So we're very excited to be walking Mike up here to be sharing with us. And we had a chance to talk a little bit of what you're going to be talking about. So I'm going to sit in the back and take some notes.
Okay.
Perfect. Thanks so much for coming on out.
And I think this is really exciting to see. Thanks. See, and part of what I've been asked to share is kind of my journey as an entrepreneur over the last 25 years. And what I thought I'd do is kind of share with you along kind of three themes. The first is my journey or my evolution as a CEO. The second is the evolution I've seen in the startup, kind of the way the startups are done, especially the background that I have in software companies and in the IT companies. And then the third is the evolution that I've seen in the ecosystem, the startup ecosystem. Something like this is really exciting to see, right? Pitch clubs and getting up and explaining. I mean, look how many people we've got together that are cheering on, seeing some really exciting companies in their kind of formative stages, and being able to get the advice and how this world has changed from 25 years ago when we had 2 VCs in town, and that was about it. So, let me see, how do I get this? Oh, look at that. Great. So let me start the story off. 25 years ago, 1993, we started a company called Steeplechase Software. This story is a story about really transitioning from being an engineer focused on a product to learning how to be a CEO, which in my mind was a pretty rough transition. In fact, for the first couple of years when I was running the company, I was kind of a little cautious about calling myself a CEO because I didn't feel like a CEO. I didn't really know what a CEO did. We started the company. I was an engineer at Allen Bradley. We saw some trends happening in the world where a lot of proprietary controllers could be replaced with PCs. As Windows came out, as real-time operating systems were in place, you could basically start replacing factory controllers with what's called PC-based controls. At the same time, I wrote a business plan at and wasn't Ross, it was a Michigan Business School, that ended up winning a pitch plan, probably the first pitch competition called the Pryor Award at the University of Michigan. And we then launched the business in my basement on Steeplechase Drive, and hence the name of the company, Steeplechase Software. So for me, it was a whole new world in learning how to be a CEO. How do you work with investors? How do you work with board of directors? In fact, the board of directors was my ecosystem because there wasn't a big ecosystem around in Michigan at the time. I had some phenomenal CEOs that were sitting on my board that were really coaching me through and giving me a lot of advice on what to do. We didn't have a Spark, we didn't have meetups. We were kind of on our own, learning how to manage the business with the advice of our investors and with the advice of some of our board members. The way that products were developed 25 years ago is basically because you had to ship your software on, it's going to sound old school because it is, 5.5-inch floppies. So when we shipped our product out, we were shipping them out on 5 or 6 5.5-inch floppies, which kind of dictated the way that your product and your software design was done. So we would go through and release new product cycles, every 6 to 9 months, extensive quality cycles, because when you shipped a product, you couldn't just go in and update the cloud, right? You had to go in and revise and send new revisions out if you made a mistake or if there were any errors. So you had very long development cycles. You didn't have, we'll talk about kind of how the world has changed, but we weren't doing MVPs. We were shipping products. We had very definitive roadmaps that we had to follow. And there was also a feeling, and whether this was me or whether this was kind of the community of, you wrote a business plan, you followed the business plan, you stuck with the business plan because that's what investors were expecting. You didn't have this concept of agility or being able to figure out what the market was and pivoting, every week if you had to based on customer feedback. We were fortunate enough to grow Steeplechase into what Frost & Sullivan called the undisputed market leader in PC-based control. We had over 30% of the market. The challenge was that we were a $10 million company, which means that after 7 years, it was only a $30 million market, which was supposed to be a $300 million market. So in 1999, when we went out to raise more capital, we went and started talking to venture capitalists. So we raised our first $10 million in all in angel money and in angel investors around the community. We started talking to VCs, and what we heard in 1999 is, well, what's your .com story? Because if I invest in a .com, I can get 10x return, and I can get that in 12 to 18 months. So I need to know your .com story. And we were a factory automation company. We didn't have a .com story. And so at that point in 1999, we decided to sell the company. As a market leader, we felt that it would have been really difficult to throttle everything back and fall into second or third place. And so we sold the company to Schneider Automation, a multi-billion-dollar French conglomerate, with what I would call an okay exit, but not a home run exit. A couple of lessons learned out of that, though, is two things. One is, as an engineer, and my co-founders were engineers, we were really excited about the product. We were very focused on the product. We spent a lot of time thinking about the product. And we didn't spend enough time thinking about the market or the pain that we were solving in the marketplace. And the challenge is, or the lesson learned is we spent 7 years growing an industry leader, a market leader, in a really tiny market. Wow, if we had focused on something we paid attention early on and focused on something much bigger, we would have had a much better return, been able to grow a company to a bigger position. The second lesson that we learned out of this is when we went to go to sell the company, we had one buyer. And kind of as some investment bankers will tell you, is one buyer is no buyer. They had all the leverage in the process. And so the walkaway lesson there is thinking about, as you're building your company, because you're building your company, most of us are building our company, we're going to sell our company, thinking about what that exit strategy is ahead of time and making sure that the company is built so that it's appealing to multiple buyers and that you're playing this company out so you can sell to multiple buyers. Because when you have multiple buyers at the table, now the price becomes much more competitive as buyers are willing to pay what the other buyers are willing to pay. And you'll see that as I talk about the last exit we had with online tech, it worked well to have multiple buyers at the table. So that's the story of transitioning from an engineer into a CEO. Okay, sorry, I screwed this up, Sarah. Did I move something? Or? Oh, sorry. The next story is so the next company I went to was Interlink Networks. This is a story of a turnaround. So in 2000, the company raised $5 million. These were the go-go days of the internet, where you literally could have a napkin and write something on there, call that a business plan, and it was not that hard to raise money if you had a .com or an internet security story. We were an internet security story. I came on 11 months after the company was founded. They raised $5 million. When I got there, after we kind of started digging through the books, we found that the company had $555,000 left in the bank, and our burn rate was $500,000 a month. Just to add on top of that, our revenue was $5,000 a month. So we had about 60 people in the company, and from a very interesting perspective, when you come in, you know you've got 5 weeks to live. You've got to extend that timeline. What do? You need to make some hard decisions. You need to make them fast, and you need to make them without a lot of data, right? So I am absolutely positive that half the decisions I made about who to lay off, I cut about 2/3 of the staff. I'm absolutely sure that half the decisions I made were wrong based on the limited data that I had, but action was more important than no action because we had to extend our runway, and then we had to get out in the market and close some deals. So we were able to extend that runway by 3-4 months. We signed deals with Hewlett-Packard, with HP, with Nokia, with Siemens, and we're able to leverage that into getting another $8 million investment. And the whole focus of the company was in the telecom market. So we were going in and selling a security product for telecoms. And what happened in 2002? The entire telecom market fell out from underneath us. The capital spending in the telecom market dropped by 90%, and we were caught flat-footed with no market to sell into. And so we pivoted the company, took the technology that we had for telecom security and dial-up security, and we moved that into Wi-Fi security. All kinds of product awards, but we invented basically a 2-click approach to securing for small and medium businesses that didn't want to know anything. And back in these days, it was really complex to set up your Wi-Fi network, you could hit a couple buttons like setting your garage door opener, and boom, you were connected to your Wi-Fi in a very secure way. Great product reviews. We took it out. We showed it to customers. Customers loved it. They thought it was great. What happened? Nobody bought it. The sales ramp, I mean, some people bought it, but the sales ramp was not even close to what we had told our investors, to what we expected to do. And what the lesson learned, or what we found out, is that even though when we showed people the product, said, this is great, this is really cool, even though we won a lot of really good product awards, we weren't addressing a pain. We weren't addressing a top 5, even a top 10 pain that CIOs had at mid-sized businesses that they really want. They couldn't even, a lot of small and mid-sized businesses couldn't even spell VPN at the time, and they couldn't even understand, Wi-Fi security was not a critical issue. And so when we went out and started showing our product and saying, hey, what do you think about the product? That was the wrong question. What we really need to understand is when you think about like Wi-Fi, or when you think about your network, what keeps you awake at night? And Wi-Fi security wasn't what kept them awake at night. So that pivot failed. We ended up, the investors left the company or bailed on the company, and we ended up just cash cowing the company. So we had Siemens, Nokia, HP. We cut the team down to about 6 people, cash cowed the company, and in 2007, or 2008, when HP finally terminated their contract, we ended up giving it to one of the managers, the business to one of the managers, and he's still running that business today, serving a lot of telecom partners and customers. So the 2 lessons learned out of the Interlink experience is, first, find the pain. A great product, I guess I didn't learn enough about great products or focusing on products to pain and markets. We thought we were testing the market by asking about, hey, do you like this product? Do you see what we're doing? But we really didn't address the pain or look for the pain and try to find out what the pains were that our customers were facing. The second surprising thing to me is, here we are 15 years later, and they're still selling the software. Enterprise software, supporting the software. Enterprise software doesn't die very easily. And it's kind of surprising to me. So we're selling it to telecom, they build it into their infrastructure, and there still is a relatively small business that's supporting this, but it's still ongoing today. Interlink Networks is still out there and still running. The next story with online tech is a story about fixing and scaling a business. So online tech was started in 1993. It was back in the internet era, so it was one of the first internet companies in Michigan. It had been through a number of different bouts, a number of different investors. I joined the company in 2008. They had 2 data centers, a really empty data center up in Flint, Michigan, and a data center here downtown Ann Arbor. The challenge was that they would sell anything to anybody, and then they'd build anything for anybody, and they had nothing that was repeatable. So when a customer came in and said they needed a firewall, an engineer would say, I think I'm going to build an open source firewall this time. And the next time they say, well, I think I'm going to go to Watchdog or one of the off-the-shelf boxes, and I'm going to put that in place. And so every customer had a unique configuration. Every customer had a unique delivery, and half our customers loved us because we'd bend over backwards to do everything they wanted, and half of them hated us because we didn't really deliver what they thought they were going to get. So we ended up having to change the entire way that the company worked, the way that the company thought about it. We started putting systems in place. We started putting procedures in place. We started standardizing on things. We sold off all the email customers that were $20 a month, $30 a month. That took a lot of our support costs. We sold off all of our web hosting business. We started focusing on mid-market companies. We started focusing on how we could differentiate because we had a dozen different competitors here in Michigan alone. And if you don't differentiate, it's a race to the bottom on price. And so everybody says, oh yeah, you can host and you can put my servers in place, or you can give me a dedicated server and I can look up online. And what's the next thing that comes out is price. How low can you go? Where can you go? And so we needed to start differentiating ourselves on security, on compliance. We started making some investments in very strategic, very specific areas that allowed us to do things like HIPAA compliant hosting when nobody really knew what that was, and we were just bringing that to market to start focusing on healthcare companies. We did a lot of work on SAS 70, which was an old standard for the financial community, really trying to drive a wedge between us and our competitors who weren't willing to step into that arena to differentiate themselves or to take on those security businesses. And couple that focus with really a focus on execution, setting up goals on a yearly, quarterly, monthly, weekly basis so everybody, when they woke up, knew exactly what they needed to do for the company to be successful. Focusing on metrics and measuring our success every day, every week, every month, every quarter, and then putting the processes in place so that everything we delivered, we could deliver in a repeatable fashion and really focus on giving our customers exceptional experiences. And that became one of our key internal taglines was we're delivering exceptional experiences to our customers. And we measured that with a net promoter score, which was in the high 90s or the mid 90s, which is exceptional when you're looking at customer quality or customer feedback and response. We were able to grow the company from $2 million when I got there to $15 million when I left in 2015. In 2012, we sold the company for the first time for a 10 times return to our investors. And then just at the beginning of this year, we sold it again for a 6x return for our private equity investors and the other individuals that were invested in the company for what I think was a pretty good success story by becoming the leader in our market space. So we were the number one player in data center co-location and private cloud delivery here in Michigan. So differentiating and really driving a wedge between us and our competitors. And so the lesson learned here is, a lot of times execution will beat vision, right? You have a great idea. Here was a company that was struggling for 15 years that had a lot of different ideas, and we had enough people in the company that were idea people on how to do different stuff. But really the discipline of execution was what really allowed us to go from 2 million to 15 million in a fairly short order, right? That allowed us to drive great profit, great EBITDA, and great returns on that. Differentiation was the key, because if you can't differentiate, especially in a commodity market, and I would say that online tech was in a commodity market with data hosting or data center hosting and with dedicated servers and clouds. If you can't differentiate, again, it's a race to the bottom on price. And my favorite two words, recurring revenue. In the first two businesses, we had software businesses. So Steeplechase and Interlink were the traditional software model where you sell software and you get 10 to 15%. 10 to 15% of your sale price would be your maintenance, annual maintenance and upgrade fees. With recurring revenue, which is what you're going to see in software business, software as a service businesses, you know what your revenue is going to be next month, the month after, the year after this. You've got to manage churn, right? Your customer's leaving. You've got to manage and really focus on the growth. But the ability to scale in a recurring revenue business, you have the security of knowing what your revenue is, and you can focus on really driving out your sales and marketing team to drive that revenue. It's a beautiful, beautiful model. So if you have a chance to run a company or to drive a company with recurring revenue, that's a great place to be. And so that takes me to Genomenon, and a company that I'm super, super excited about. Genomenon started in 2014, was spun out of the University of Michigan by two founders, Dr. Mark Keel, who's a molecular pathologist, living in the world of genomics and applying that to cancer and using that to determine, I'll talk about precision medicine in a little while, or precision medicine of cancer patients. And his co-founder, our co-founder, Steve Schwartz, who has done a number of software companies, has another company in town that helps software companies get started, and is really a visionary and really a key, really understands the technology it takes behind building search engines and big data sets. I joined the company in 2016 as kind of the hired gun CEO to really focus on the go-to-market strategy, to focus on raising money, talking with the board, working with the board, working with investors, and working on the long-term strategy of the company. And what the best way to describe Genomenon is, think of, we're the LexisNexis for genomic data. So the way that lawyers use LexisNexis to research their client cases against case law that's out there and that's published. We're doing the same thing in genomics. So for doctors, we connect doctors with the 30 million scientific articles that are out there, the evidence they need that's tied to the patient's DNA for rare diseases and cancer. And the end output is we help them drive better diagnosis or diagnose their patients, provide prognosis for their patients, and choose the best therapy for their patients based on the genomic content of either their cancer or the constitution of their rare disease that they may have, or their personal DNA that could be driving a rare disease. Let me just share with you a couple of stories and tell you a little bit about precision medicine. So 25 years ago, when my mother had breast cancer, they had a regimented therapy, right? You did treatment A, you did treatment B, you did treatment C, and if treatment C didn't work, maybe we had a Hail Mary and we tried treatment D, but that was about all that was out there. Everybody went through the same regimen. Today with precision medicine, everything's changed. So instead of starting with treatment A, B, C, and D, we now sequence the cancer's genetic makeup, and we know that certain cancer, based on the genetic makeup, reacts to different treatments in different ways. So we may take a patient today that has breast cancer, and they may start on treatment number 10, because if you have this DNA makeup, it may signify that you have an 85% chance of curing that cancer with this particular treatment. Yet a different patient may start with treatment number 2 because their DNA is much better tuned to that therapy, and he'll react better in that way. So let me share with you kind of how that works, not just in cancer, but in the rare disease side. So one of our customers, Rady's Children's Hospital, is a leader in taking genetic treatments or genetic analysis in the NICU and the PICU. So babies that are in intensive care, they don't know what's wrong. They go in, and what they'll do is they'll do a full genomic sequence. So they'll look at 3.2 billion nucleotides in the baby's DNA to try to determine what's going on. And it's a race, because a lot of times these babies are in critical condition, critical shape. They need to figure out what's going on and how to treat the babies. In the case of one patient, one baby, they were having 10 to 12 seizures a day, terrible seizures, life-threatening seizures. The parents were beside themselves. They decided to rush through and do a full genomic sequencing. Typically takes about 40 hours to go all the way from taking the baby's blood sample all the way to coming up with a diagnosis. They ran through their standard process. They looked through the standard ways to try to look at literature. They used Google Scholar. They used PubMed. They couldn't find any correlation for what was going on with this baby. And with Mastermind, we were able to take into the literature and the research that pointed to a nutritional defect or a nutritional problem that was caused by their genetic mutations, that by simply adding a nutritional supplement to the baby's diet completely stopped the seizures. I'm going to talk about mission and kind of passion and what gets you going, but when you sit down with doctors and they tell you about how your product is saving babies, when you can hear about, University of Vermont, we just had a press release come out today, has standardized and made the standard of care using Genominon's Mastermind for every patient that they run through their cancer labs, because we find the data that nobody else can find. There's 30 million publications, 6 million of those articles out there have genomic content associated with them. And there's no way, if you think about it, trying to find that information with a Google, you can't do it. And we pinpoint those articles, and we take those physicians right to the information they need to either find the best treatment for the best therapy for cancer patients, or to help figure out what's going on with a baby, with babies or with rare diseases, to help cure these patients. And so I talk a lot about, and I will talk about passion, but you can see what kind of drives our company and what gets us excited. I'll show you one more story. So imagine, in this world there's some people that are morbidly obese. And imagine that you're in that situation, you don't know what's going on, there's really no indicators of going on, and you find that there's a genetic defect that is driving you to be insatiable. Like no matter how much you eat, you're never satisfied. In fact, there are, in the MC4 pathway, and don't ask me about the biology because I'm not a biologist, but there is a pathway that can cause people to never be satiated when they eat. Rhythm Pharmaceuticals has a drug that's in phase 3 clinical trials, and they have gone off and they have had their PhD spending the last 2 years trying to understand the entire genomic landscape of monogenic obesity. And they have been kind of mixed results. They really haven't been able to do that. We've been able to go into the back end of our product and look at, within 4 weeks, we identified 120 genes, 10,000 mutations that were directly or associated with monogenic obesity in the literature. We were able to give them all the literature citations, and now they've come back and asked us to tell them which of those are disease-causing or not, and we're running AI and machine learning to drive all those answers for them. What does this mean when you take it down to a human level? It means that there are patients out, what they're going to do is they're expanding the set and their focus on which patients they can help treat. Not only in their clinical trials, so we're expanding the clinical trial database, but ultimately we're helping find more patients and connecting them with the drugs through their genetics that is not easily found today. And so we're able, in a different way, able to help pharmaceutical companies, help patients, help more patients, going back to precision medicine and giving them a treatment that's tied to their genetics. And so, how has the world changed? Well, a couple of things, on this journey that I talked about. Me as a CEO, when I joined the company, I didn't even want to look at the product. In fact, there was 2 months, I was driving Mark, our founder, crazy. I want to show you the product, I want to show you the product. He's like, I don't want to look at the product. I want to talk to customers. I want to hear about the problems that they're facing. You can show, I'll see the demo when you show them the customers, but I want to understand how we're solving their pain point and their problems. And every lab, every clinical lab that we talk to has got a problem with interpreting the variants based on the research, the genetic mutations based on the research. There's a real pain and a real problem, and most labs in the genomic world will not be able to scale unless they can solve that problem. That sounded interesting to me. Kind of shifting from being an engineer focused on the product, which a lot of really good visionaries who live in that world are very product focused, to really understanding the market, the pains, the needs that are out there, listening and understanding, reacting to a pharma company found us, Rhythm Pharmaceutical found us, and now, being open to that input, understanding what they want, pivoting a little bit on our business model, and now we're talking to a dozen different pharmaceutical companies and finding that there's a lot of similar companies facing similar challenges in the pharmaceutical world, and they're willing to pay a lot of money to solve that problem. But the software world has changed as well. So today we do releases every week. We fix a bug, we find a bug, we release it overnight. The whole idea of doing a MVP, minimum viable product, was not around 25 years ago, and today you can launch a product, you can get feedback, you can offer it in a lot of different ways and get very fast market feedback that allows companies to be much more agile. And really the whole theme and theory behind running a company today is go in knowing that you have the wrong answer, right? I used to say that your business plan is 50% right. I actually believe it's about 10% right now. But the tools that we have today to be agile, to be able to listen to our customers, be able to pivot and move and say, okay, this is what we're hearing from our customers, especially in the software world where we can make changes and make dramatic changes in progress very, very quickly with the software tools that are out there, allow us to be very agile. And the third piece we talked about is the ecosystem. I'm really excited when I was sitting here and watching kind of the support. I'm hearing about a new angel fund coming up, and you're seeing the boot camps that are in place and the pitch clubs that are in place. Wow, if we had that 25 years ago, or even 15 years ago, where it would have made, the acceleration that we're seeing in our community, our startup community, is just incredible. And I'd like to say that Genomenon has, a lot of fathers and mothers, so to speak, because there's been so many parts of our ecosystem that have contributed to getting Genomenon to where it is today. Everything from we're looking at the pitch clubs, the Spark accelerators, what MEDC, what New Enterprise Forum has done, to the very early funding that we got out of doing some of these pitches, winning Accelerate Michigan, to Fast Forward Medical Innovation that gave us the $100,000 or $150,000 that we needed to just try what we had. doing a lot of things, the angels, and then the angel community that we have, from Invest Detroit. We got a really nice grant from NIH, which is a side note, University of Michigan, Monroe Brown Fund, Raymond Angel Group has invested in us. And all those are just a phenomenal part of the ecosystem. There is no better time to start a business in Michigan than today. This is just a great environment, a great community, and I'm really excited to see companies getting up here pitching, going through the process. I just think, take advantage of everything that is out there. And so my kind of final slide here is just a couple of different pieces. If you're lucky in life, you get to do stuff that you're passionate about. If you're an entrepreneur, don't do something that you're not passionate about. There's nothing more exciting and more scary than starting a business, and there's nothing harder than running a business that you can't stand or that you're getting up every day going, gotta go to work, right? Do something that you're really excited about. You can see, when I talk about us, for us, our passion is curing or saving babies and curing cancer. I got to get it in the right order. Saving babies, curing cancer. But we really have a mission. We really can impact the world and bring in kind of tie genomics to precision medicine in a way that nobody else can. Be bold. And what I don't mean by that is just take like crazy risks and blow all your money in the first 3 months that investors give it to you. But what I mean is that when you're starting a business, you kind of can look out and you can see a whole playing field of nothing but landmines, right? There's risks here, risks there. There's a lot of risks. You can bring in your advisors. Okay, the financial advisors, lawyers, they can kill me for saying this, but your financial advisors and your lawyers are really good at pointing out all the risks that are associated with what you're doing, right? But the biggest question you have to ask is, or your biggest risk is failing by not getting enough customers and not getting enough customers quickly. So be bold. One of the things that we decided to do 6-9 months ago is we weren't getting the uptake fast enough on our product. We decided to offer the product for free. We went around, we looked at it and said, should we offer a free version of our product? Because once you open those doors, it's really hard to undo that. We looked over the edge of the cliff and we said, okay, we're going to jump. And today we have 1,250 users in 150 labs in 30 countries that are using us, and we're adding about 50 to 100 users a week right now. And those are starting to convert to paid-for users, and it's getting the word out there. And because nobody's doing what we're doing, we're setting down a footprint that is going to be really hard for our competitors to match us and to catch up with us. So be bold. Don't be afraid of making those decisions that are going to be different or that are going to cause you to look at the world different, because your biggest risk is not being bold and not landing those customers that you really need to prove out your model. And then change the world. Growing a business, starting a business, and making money it's not that hard. But can you do something that is going to be more important than just making money? You set out for a mission. It comes back for being passionate. But if you set out for a mission, and your mission is something that's going to change the world in some way, large or small, it's going to be a lot easier to get people to follow you. And as entrepreneurs, we're all a little bit crazy, right? We're all at kind of the cutting edge. It's not the safe way to go. But it's going to be a lot easier to get people to rally behind your mission if your mission is to do something that's going to change the world in some way than it is to get to a 20% EBIT on $10 million of revenue, right? Or whatever the numbers are, right? The numbers don't drive people. The mission, the passion, the ability to change the world is what drives people to kind of join you, both from the investors getting excited about what you're doing, but all your employees, all the people, and the ecosystem that's going to take to build a really great company. So I applaud the entrepreneurs in this room. I applaud what you're doing. I think you're doing some really exciting stuff. Be passionate, be bold, go change the world.
Thank you so much. Take the microphone.